Hey everybody, today I want to answer two questions that keep popping up on my radar regarding rent to own. The first is, how is the buyback price of a rent to own property determined or calculated? How do we calculate the appreciation level? And then the second question, which is closely related to that first one, is, for example, if we say if the purchase price today for a property is 450,000 and in 4 years time the buyback price is 540,000 minus of course the initial option deposit and the monthly credit, so that brings it back down closer to 500,000. But regardless, is that difference between the initial price and the buyback price, that 60, 70, or $80,000, am I losing that money? And the answer to that is of course no, but I really want to explain to people why you have to kind of get out of that mindset. So um, on that note, if you just continue to rent right now for the next 3 years and you're paying fair market rent of about $2,000 a month, well, by that logic, over the next 3 years, you're going to lose $72,000, right? And this is why, as a realtor, I'm so passionate about helping people get out of the rental rat race and into owning, because when you're owning, you're paying down your mortgage, you're creating equity, and at the same time, the market is generally appreciating, which really helps build that wealth beneath you. But let's bounce back to the first question, and then we'll get back to that later. So, how is the buyback price calculated? So, with rent to own, we're only going to encourage you to buy a property within certain areas. These areas need to be within 20 minutes of a main hub. And by a main hub, I don't necessarily mean a Toronto. A main hub could be considered a Peterborough, it could be considered an Oshawa, a Bowmanville, a Barrie, a Cobourg, a Belleville, and there's many examples of different areas as well around Southern Ontario that would work. But ultimately, it needs to have market fundamentals that the investors are comfortable with, so that we know that the property is going to appreciate. At that point, once you've kind of chosen an area and we're starting to look at properties, we'll actually look back into the history of that property and into the history of the area. And we need to make sure that on average, properties are appreciating at least 10% per year. Now, that is the average appreciation that we're seeing in the last 10 years in pretty much most places in Southern Ontario. So it's not hard to do. But the reason that we're investing in these places is, when we decide your buyback price, it's based on a number that's usually about half of what the actual market appreciation has been. So the actual market appreciation has been over 10% per year on average. We're going to appreciate it 4.5 to 5.5% per year. Okay, so because the property is appreciated so conservatively, by the time buyback time comes around, even though you're guaranteed that buyback price of 540, there's actually a very good chance that that property is going to be worth 600,000 or somewhere in and around that area. Now, this isn't a guarantee, and it's not the idea behind rent to own, but it is a very beneficial side effect that has occurred quite a number of times in the past of doing this. Now, the other side to that people will often ask, well, what if, lightning strikes? What if COVID number 3 or 4 or whatever, comes along, and that does somehow negatively affect the appraisal of the property, and the property doesn't appraise at 540, let's say it only appraises at 520. Well, are the investors going to sell it to me at that lower price? So this is nothing that we can guarantee, but you have to look at it from a logical standpoint. So you're not dealing with a bank that has hard and strict rules. You're dealing with an investing family. So they purchased this investment specifically for you. Without you in it, it doesn't necessarily make sense. So we always want you to go into the deal having the intention of paying the full buyback price. But if the property doesn't appraise at that price, well, then chances are it's not worth that price. And if it's not worth that price, then really their only options are to rather sell it to you at a discount, or to try and sell it on the open market. Now, if they sell it on the open market, not only is it probably going to sell for the same price that the bank feels it's worth for, which would be 520 in that case, but they would also have to pay a realtor fees in order to sell it. And the realtor fees are going to cost them about $30,000, $40,000. So their net profits would be even less. So it wouldn't make sense for them not to sell it to you at a slight discount. So that is one direction that could go if the market dropped. And the other direction that they could go with it would be to simply extend the terms. So if they know this is just a temporary flattening of the market and that it's likely going to recover, well, then they would just extend the rent-to-own terms. They would extend the rental period. They would extend the rent-to-own term for another year or for another 2 years until the market recovered and they're able to achieve the profits that they want to pull out of the property, essentially, right? So this is why I kind of laugh when people say that there's a chance we're going to get ripped off. There's not a chance that you're going to get ripped off. The only risk you take with rent to own is really the risk that you take with any kind of purchasing a property, which is if you were to purchase a property with a bank today, but you were wanting to sell it in 2 or 3 years, and the market happened to go down at that time, then you still take that chance of losing money. You're paying your realtor fees, you're paying your land transfer taxes, you're paying other closing costs such as that. So there's a chance that you'll lose money. So this is why if you're looking to get into rent to own, you do need to be serious. You need to be quite confident that you'll be staying in that area, that you'll be being employed in that area. And as long as that's the case, as long as you're looking to be there for the long term, you're at least going to be in this property for 5 years, then it's really difficult to lose in real estate in general, let alone rent to own. And it's one last thing I want to mention there as well is as far as the areas that we're choosing help the property appreciation. But we also like to keep our properties in the entry level price point. And the reason we do this is because it really hedges against the market fluctuations. In fact, there's almost always a demand for that entry level property because in a bad situation or in a recession, when people are selling their $700,000 properties, they need to then downgrade. And where are they downgrading to? The $450,000 properties. And then at the same time, we've got all these people who are renting, looking to get into home ownership. And where are they entering? They're entering at that entry level, 450 price point again, right? And I'm just saying that as an entry level number for kind of Durham region right now, but I mean, that's going to fluctuate over time. But the reality is there's always a demand, and that's why the entry level price point is always kind of steadily going up. And we've seen that. We've seen that any property that you could buy for $200,000, entry level, townhouse 10 years ago, it's now worth $400,000 or more. And I think we're always going to continue to see that. It's just a supply and a demand issue. And it is what it is. And it's why I invest in real estate and I continue to purchase entry-level properties. And it's the reason why if you do decide to do a rent to own, we try and stick within that entry-level price point, again, because it's going to help the chances of success and help you to buy back a property at very far below market value. And again, creating a super win situation for you. All right, so I hope that's answered that question. I hope that's alleviated some fears of losing money. If you have any questions, please reach out to me. I'll give a link below. Cheers. Have a good one.